Where is the risk? That's what we're going to try to talk about today. It's Friday, July 21st. You're watching live futures trading with Hur Fund. I'm Arthur Hur. I'm recording this a little later than I normally do. It's a little bit past noon. So let's look at what's going on with our position. Not looking so good. Oil has been remarkably strong. It's up like over 1%. So let's mark this 30,360. Let's go 815, so that we can make a nice little thumbnail. Okay, so oil is remarkably strong. Oh, I didn't share my screen. There we go. Okay, so what are we doing on the fund? We're up 280. I'm not gonna lie. It's been like watching paint dry. It's been 2 weeks now, and our position has been up, down. I don't know. We're just waiting on theta. Unfortunately, when we were back here a couple days ago or last week, we were down huge, and now we're like moderately up. So hey, I mean, I'll take being up over being down. Let's look at the markets. I shifted this thing over so that I noticed that that a lot of times my face is covering up the screen, especially whatever's going on down here. So I moved this over a little bit. So our core thesis, as far as what I was saying before, was I think that everything kind of hinges on what happens with the dollar. After we got that inflation, that positive inflation number, we zoomed way down to 100 from 103 and 50, 60. And we traded below it. And the market saw how far it could push it. It didn't even go down 50 cents. Then traded, knocked back down into it, traded above it. Then kind of, I don't know, almost tested it. And now we're going higher. So what does that mean for equities? So 4,600 was where we kind of, I won't say we topped out because we might go higher than it, but that's where they tried to really push it to go beyond there and try to do what they did in like 2020 and 2021, and it was met with some selling, and I do think that there is significance around like round numbers. So what happened was 4,600 round number, even of more round number, 16,000 on the NASDAQ. That's where that stalled out. And look over here in the Russell small caps, 2,000. So there's significance. Whether it means that we're going to go higher or lower is obviously subjective, and no one knows. But I mean, I do think that once we crossed this 4,500, first of all, it seemed like they kept selling off. So a lot of people probably got short going into 4,500 and placed their stops all along this way. So that was just a really fast way for the market to kind of just fill a lot of orders. And I think that's probably what happened. I do think that there's significance around this number, 4,500, and that we will probably trade closer to it. It's my own opinion, and it's only buoyed by the fact that the dollar is getting stronger again, and you're seeing that play out in the euro. And maybe we can go one level deeper. Okay, so if you look at what's been going on after we got to 100 and sort of started going higher, look at how it went with the euro. I'll place it right over here so you can see how it looks. Right, it's kind of like a mirror image of the dollar. So it kind of has this like rounded thing and then goes up, and a rounded thing and goes down. We haven't really seen the S&P do the same. We haven't seen it happen in the Russell. But we have started to see a little bit of weakness in the Nasdaq. And I am of the mindset that I believe that the Nasdaq leads the market. Usually, when things top out, the Nasdaq won't be the first to dip, and when things bottom out, the Nasdaq will be the first to rally, and then everything kind of catches up. It's just the story of the fact that technology has been such an important part of society, and so a lot of these tech companies are leading the markets, and a lot of the tech companies are really represented in the Nasdaq. I mean, they might change that, I guess. So who knows? I don't know what the specifics are behind what might happen there, but that's kind of what I'm expecting. Is if the dollar keeps going up, I think that equities might catch up based off of this kind of negative correlation, and I think that the dollar leads what will happen eventually, whether it's days or minutes or a week. That's what I'm looking for. I could be wrong. I mean, we could just go right back to 4,600 and zoom right up to 4,800 to 5,000. It's possible. But it's not what I'm expecting, and it's not how I'm positioned. Right now, we only have one position on, and it's crude oil. So I'm surprised at how resilient crude has been throughout this. Throughout this entire time. So our position kind of wants crude to be here. If we can fall back down to 72.50, then we'd be looking pretty good. And I know, Karn, you asked before, do I have any metrics around when to manage the trade, when to roll, that sort of thing? It's subjective for me. I kind of like being in that like 2-week range, give or take a couple of days. So 15 days I think is a 15 days out. I think is a really nice time to see how things go. Obviously, you want to roll when you are up. However, that puts you in a weird position too, because usually if you roll when you are in a really sweet where the price is in your sort of like ideal delta like range, and also if you get like a drop in IV in implied volatility, then you're going to be rolling that into the next one, so you're not really gaining that much other than just the time. But I mean, that's how it goes. I want to do next week, I'll do a video on like my problems or issues with the sort of like tasty mechanics, specifically around IV rank. And the fact that what it does is it assumes that you know what's going to happen to IV, and volatility is something that mean reverts, but what is the mean? It comes down to a lot of that the sort of subjectivity around what you choose to focus on, like the same way that you can look at a pattern in technical analysis and be like, oh, this is a head and shoulders pattern, so it means we're going to go lower. But then you zoom out and you're like, oh no, but that's part of a cup and handle pattern, so it means we're going to go higher. I mean, they choose 12 months. Anyway, I'll go into it further. The thing is, the reason why is because, and look, it's not really helping us because our positions have not really gone anywhere. But if you look down here, this is oil volatility. It's been really low. And that's why we haven't really gotten any juice out of our position. But I don't know, what can you do? You have to be in it, right? So the IV is telling you that things are going to be kind of in a range, and they are. So what does that tell you? It just tells you that the market's correct, and it's hard because it's frustrating because you want to like make some profits, but you can only do what the market gives you. And if you choose not to participate because like IV is low, what if IV is just remains low? Then you just missed out. So I think that in the grand scheme of things, data is greater than IV, and that's I guess I'll just leave it there. I mean, how are we doing on time? 10 minutes. Okay. Well, have a great weekend, everyone. I'm doing this, and it's been about 2 weeks. I don't know. I mean, I don't know if I should keep doing this or not. Hopefully, and for everyone that's been tuning in and coming and watching me just spout off and speak into this little green dot. Thank you. I don't know what the future of this is going to be, but if you enjoy it, or if you want me to keep doing it, make sure you subscribe. I mean, tell someone, and I appreciate the likes and the comments and the emails. So keep those coming in. Yeah, let me know if there's like if I should do this like less frequently. Maybe I do this once a week, or maybe put in a little bit more preparation. The thing about this that makes it like doable for me is that I don't have to spend too much time, really editing things and preparing material, just because I have so many things going on in my life. But I appreciate you coming here. Appreciate you watching.